Hello everyone and welcome back to Crypto Atlas. In today's video, we will be talking about Bitcoin, some new news that came out with this, as well as taking a look at the charts and what's going on with Orchid, aka OXT. We're just going to focus on these two today, and I do plan on today being a little bit of a shorter video for you guys. We do have a new candle formation for the daily, and previously it just closed out below the 21 EMA. So this is showing more bearish signs, but we'll take more of a look at that here in just a little bit. Guys, if you are new to the channel, feel free to hit that subscribe button if you want to have more information on Bitcoin and other cryptocurrencies. I try to keep you guys in the loop and up to date on this stuff. So the most up to date you can be is if you click that bell notification. And if you can help us out, it would be so greatly appreciated if you take a quarter of a second to hit that thumbs up like button. We're trying to get to at least 50 likes on this video, just like every other video, trying to get at least 50. Thank you guys so much. Okay, so first thing is some quotes that are going on here, taking a look at what's been going on with Bitcoin's slide down that happened, right? Konstantin Kogan, partner at crypto investment firm Wave Financial, pegs $17,900 as a support level whereby if traders don't start scooping up Bitcoin to push price back up, there may be a larger fall. The trend is weakening, Kogan told CoinDesk. If we dip further, then I will consider that as a start of a downtrend. Chris Thomas, head of digital assets for Swissquote Bank, has noticed a lull in the market this week, but sees it as a buying opportunity for those who have a longer time frame. I'm not scared by this. It's just providing a better entry point for those who want to invest mid-long term, said Thomas to CoinDesk. I haven't seen much over-the-counter or larger activity this week, though. Henrik Kugelberg, an over-the-counter OTC crypto trader, is not dismayed by the doldrums in the crypto market this week. It's a moderate dip on the way up, Kugelberg told CoinDesk. Nothing to see here. What do you guys think about this? You guys think that this is just a little hiccup? Do you think this is actually signs that it's weakening and we're going to start crashing down? By the way, we also have some big news in regards to a major purchase that took place, $100 million. And I'm going to be talking about that in just a little bit as well. Also, just so you guys know, I'm not a financial advisor, so anything I'm sharing with you is my own opinion. I highly encourage you guys to go do more research. Hopefully this is helpful though to you and helps you make a little bit of a better call on your own. But just keep in mind, please don't ask me for actual financial advice. Most of the stuff I'm doing is sharing with you guys off of what's going on in the news. And then I do a little bit of technical analysis and give my opinion on that as well. Okay, moving on to the next thing. Bitcoin chart views have soared along with price in November, TradingView says. Bitcoin traders stared at price charts over 3.4 million times in November, which may sound pretty good, but we'll explain a little more. Watching the leading cryptocurrency pass its record high price from 2017 late in the month, according to leading chart services TradingView, which I use TradingView as right here. This is TradingView. BTC USD has consistently been the most popular viewed symbol this year, said David Bell, the company's UK growth director, in an email to CoinDesk referring to Bitcoin and the US dollar. TradingView supports price charting tools across stocks, futures, foreign exchanges, cryptocurrency, and other markets. What we're seeing is that currently there's simply a massive amount of interest in Bitcoin, Bell said, primarily from the major financial institutions. Bitcoin chart views on TradingView are still down roughly 50% from the record highs set in late 2017. Let that sit in for just a minute here. So as much as all the hype and you got more people that know about Bitcoin and everything, right? Most of this drive, this bull run that's been going on has been from the major institutions, not from the regular retail type investors that we were seeing previously with the 2017 period. So people are not proactively engaged in talking, and the hype isn't quite there as what it was before. The price is showing a reflection of people with big money pockets coming in, right? But the actual reality comes into play that for TradingView, roughly down 50% in comparison to the 2017, the amount of people looking at the charts. But since launching support for Bitcoin and other cryptocurrencies in 2016, TradingView's charting tools have been widely integrated across almost every leading cryptocurrency exchange. All right, next up, really cool news. Singapore's DBS Bank is to launch a new digital currency exchange featuring Bitcoin, Ethereum, XRP, and Bitcoin Cash. I don't know why So many people still push the idea with Bitcoin Cash, but it's like Ethereum Classic. People still support that. It is what it is. DBS Digital Exchange will be the world's first cryptocurrency exchange backed by a traditional bank, says DBS chief Piyush Gupta. It will allow Bitcoin, Ethereum, XRP, and Bitcoin Cash to be traded against the yen, the United States dollar, Singapore, and Hong Kong dollars, and may be in business from next week. So it's right around the corner with this, right? Here's what they were quoted as saying. We bring a large origination capability from our capital markets presence. We bring a substantial distribution capability, which includes into our own private bank and wealth base, as well as institutional client base. And because we are an established custody house, we've built a lot of capabilities and knowledge and experience in managing the custody function as well, he said. So leveraging the power and strength of DBS Bank allows us to build volume, liquidity, and scale in this exchange in a manner which a lot of other bespoke exchanges find difficult to do. While institutional investors, including financial institutes and market makers, can access the exchange directly, retail investors, which is what we're talking about really that pushed up the momentum in 2017, who have to be accredited inventors, would have to access it via DBS Vickers Securities or DBS Private Bank. So they still have access, it's just a little bit different. Under the central bank regulations, accredited investors are those whose annual income is at least $300,000 or $224,000 in the United States version, or their personal assets exceed $2 million of Singapore's dollars, or net financial assets exceed 1 million Singapore dollars. So you got to be doing pretty darn well over there in Singapore to really be considered as that position, right? The accredited investors. And we're seeing a lot of big players coming in, and that leads into the next point, guys. You guys ready? Here we go. $100 million investment from the 169-year-old Mass Mutual. Oh my gosh. Another big player stepping up. Massachusetts Mutual Life Insurance Company has purchased $100 million in Bitcoin for its general investment fund, the latest mainstream firm to dabble in digital assets. The mutual insurer also acquired a $5 million minority equity stake in NYDIG, a subsidiary of Stoneridge that provides cryptocurrency services to institutions. Stoneridge has also been talking about Bitcoin a lot this year, according to a statement. NYDIG, which already keeps more than $2.3 billion in crypto assets for clients, will provide custody service for MassMutual's Bitcoins. So $100 million investment. The investment in Bitcoin will represent 0.04% of the general investment account of nearly $235 billion as of September 30th, MassMutual said. We see this initial investment as a first step and, like any investment, may explore future opportunities, spokeswoman Chelsea Harity said in an email. So guess what, guys? They got $235 billion worth of potential money to tap into with this. They're doing $100 million right now, 0.04%. 0.04, right? And what have a lot of billionaires been saying? One of them, most notably, he said 1%. It's like invest 1% of your portfolio, essentially like you're putting it underneath your pillow just in case something ends up happening and the devaluation of the dollar and things start to shift around a lot. Well, you got something in the game. You got just a little bit of skin in the game, right? 1%. They're at 0.04%. They do 1% of that. Wow, what is that, like I think that's like $2.35 billion, if I'm correct on that. I think I'm doing my math right. 2.35 billion. A lot of money, potentially. 100 million, still really good. Keep in mind, that's more than double what MicroStrategy just recently did. They did 50 million, right? And everyone's like, oh my God, this is $100 million. Separate company with a whole bunch more potential to still come in. And there's even more companies that are out there. December isn't done yet. 2020 is not done yet, guys, right? Come into next year. You got first quarter. People will be looking at their books and saying, hey, we got a brand new quarter. We got new year, new fiscal year. I believe setting up for some people going into that pretty soon as well. And some more opportunities for new projects to look into, which could include Bitcoin. Also look at what's going on with Jack Dorsey over Twitter, right? And Square. They just barely dipped their feet into the water with this. There's still so much more potential to go. Just need to get the approvals from everybody. Okay, now we go take a look over at the charts here. Looking over at Bitcoin. Well, Bitcoin had a daily close yesterday in the red, and it did pull down below the 21 EMA. And the new daily formation, we're still seeing a decline taking place, probably because a lot of people that are traders are looking at this and saying, hey, we officially went on a daily close below the 21 EMA. Last time that we had a daily close, not, you know, dipping down below. We've done that multiple times. But a daily close underneath the 21 EMA, that was all the way back on October 7th. So about 2 months ago. That's a long rally being above the 21 EMA. We are in a bull run and we've been doing really well. Retracements are taking place, but this should be a little bit of cause for concern for people that we have officially dipped down below the 21 EMA as the psychological element starts to come into play, which what a lot of this technical analysis is identifying trend history of emotional reactions to things from people, right? So that could lead to an indication that more people are going to try and sell off with this. But the major institutions, if they keep their strong hands, then they might be buying those dips, preventing that psychological element from really coming into full fruition. The cause for concern is that as major institutions continue to buy more, they become bigger whales, and if they decide to dump, their splash is going to be even harder hit than if smaller people cumulatively came together. So we're seeing these increases in the numbers of whales containing these large wallets. And, you know, it's a little bit cause for concern, but keep in mind that it's not like it's an individual, right? A lot of these are hedge fund type groups. So they're essentially managing these Bitcoins for a large amount of clients together. So the group of clients would have to come forward and make remarks with that. Some of them are also using it as just a simple store of value as a hedge against what's going on with the inflation of the dollar, and they're looking at it more as like a retirement long-term security kind of thing. And yeah, so we've got ourselves in a position right now too. If we go back up here, you guys can see there's a lot of pump and dump situations going on. Pump here on November 30th, immediately retraced down the next day. Next 2 days pushed up, next day came back down and essentially filled in most of that gap that was set up there. Then the next 2 days, another climb up. And then guess what? The next 2 days, a further retracement back down. And that bottom line tapped right down onto the same level for November 30th. Very interesting in that point. Now you can see here, next day we had a large continuation of drop down below the 21 EMA, but a recovery, and it closed just above the 21 EMA. Just above it, right? And most of that, from what I remember, took place right near the closing time for the daily candle. So it's kind of like a rally to make sure that it didn't establish itself below, which I also find very interesting. And then the next day, essentially everything that was gained from the previous day has now been sold. And the daily close was essentially trying to push it right back up to that point. We're still below the 21 EMA. As it is right now, things are looking more bearish. I would love for this to go higher. I want it to break the all-time high, but I do err a lot of caution to people with this. This is a strong indication of us having a further correction back down. And I don't want it to go down, but it is what it is, right? So a key level I would be looking at is right here at $17,650. As we can see, that does have a bit of sorry, I forgot the specific word. You can see that it occurs at lots of these different levels right here. The dip and bounce off of on December 9th. You can see it also on November 22nd. You see it very closely on November 20th, and then the position point also with November 17th. So I would be really, really keeping an eye on at this point for a low of $17,670. That was right around in that range with the CME futures gap. I believe the CME futures gap was all the way down to $17,000. If this does have a break back up, we need to get above the 21 EMA now, which is going to be at $18,277. If it can break above that, roughly $100 from where it's at right now. Well, $100 from where it's at right now. Funny when I say that, right? That's because of the volatility with crypto and especially Bitcoin, up and down, up and down. So if it can break about another $100 up, we can be once again above the 21 EMA. This daily close down below, although it's not a series of continuations on with that, it by itself is still a negative position. And just cause for concern that people are going to feel that there needs to be more of those candles coming up soon. So really a critical time right now with Bitcoin and the stuff that's going on with the stimulus checks, not only here, but over what is being discussed with Europe. A lot of people want to know what's going to happen with this, and that's including the stock market too. Back and forth. The stalls have an impact on people's ideas on this. It's just crazy right now, right? So it's very hard to accurately take in this news and information when it's so wishy-washy with things about what the government is doing with regulations on because of the pandemic, right? Lockdowns and the stimulus checks. It's crazy. So let's go ahead and save this, and then we move on to Orchid, and we're going to go ahead and wrap this up real quick. So let's go take a look at their website. I want to see this real quick and see if they did update or not. Their total supply, it was around 440 million before. Okay, good, they did. So now it says 497 million. There's a total supply of 1 billion. Almost half of all of their tokens are now out and released. And this took place as of December 9th. You can see they're 22.4 million and 33.7 million respectively that was released off of this daily schedule format for the SAFT 2A and the SAFT 2B. And then we have another one that's going to be coming up here on January 9th for another 3 million, and then it's essentially once a month they're doing these big releases of a couple million. But when you look at the broad retrospect of things, 3 million, or even if we round it up to 4 million, right, in comparison to 1 billion tokens, it is quite a substantial difference. So yeah, there will be that being released out in the market. There was good news about them launching with the Windows protocol, so we can actually go to Twitter here real quick and go take a look at what's going on with Orchid protocol. Orchid. And with Orchid protocol, they had actually mentioned right here, good news. We're excited to announce that Orchid's command line client is now available for Windows. The beta release is another key milestone in making our suite of privacy tools available to desktop users worldwide. Check it out. Now, keep in mind, when you actually go and check out the article, again, it's a beta, and it's not as easy to really get in there with it as what you might hope. So it's early stages. Note this is an early beta release. It requires some effort on the command line in addition to manually editing files and installing a driver. Thank you for trying out our beta. Our product team would love to hear your feedback or help needed on our Telegram channel. So initial phases, it's there, cool, we made progress, but it's not easy. It's not something that someone that just bought a Windows computer can just start using OXT Orchid stuff, right? So progress, yes, not where we would want it to be though, but it is progress, and progress is still progress moving forward. All right, now looking at the charts itself, you see that we had a nice little bounce action that took place right here off of that for the previous daily candle, but we have 1, 2, 3, 4, 5, 6 daily candles that are all in the red. Since the $1 drop, we have had at most 6 consecutive candles in a row that were red. We almost had 7. If we go right back here, you can see that there's 4 formation there, there's 4 right there, there's 4, 5 right there. And then if I zoom in even more, you can actually see that this was just barely, I mean, it's really hard to kind of see it, but it's just barely a green candle. Could have very easily have been a red candle. I mean, that's as thin as it can basically get. 1, 2, 3, then green, 4, 5, 6, 1, 2, 3, and then there's another one of 4 right there. So if that was hypothetically a red candle, which it wasn't, but let's just say hypothetically if it was, that's 1, 2, 3, 4, 5, 6, 7, 8 candles in a row. So I would say at most, given this track record since the $1 downtrend, no more than 8 red candles should be expected. It is possible, but when you're looking at the trends and what the track record shows and its past history, nothing exceeding more than 8 seems probable. More probable, sorry. Smaller chance of it happening than for it to actually have a green candle and hopefully a further continuation up. Then you could also see here we have 1, 2, 3, 4, 5, 6 red candles taking place starting back from September 29th. And once again, just kind of zooming in here a little bit more, there's 5 right there, another 4 right there, and you get the point. So below the 21 EMA, it now has 1, 2, 3 days of confirmation below the 21 EMA. I am currently bearish on this, and signs, especially with the release of all those extra tokens, suggest there is a higher likelihood of it having a further correction down. The green candle for the time being, we're about 24 minutes into the new daily position, shows some signs, but if Bitcoin starts to drop a lot more, you can be pretty much guaranteed Orchid is going to start dumping heavily as well. And it's unfortunate, it is what it is. The Windows update was something that a lot of people were hyped up for and looking forward to. And the way that it's a beta and you got to do all these extra things to be able to use it, it becomes too complicated. So I'd say the next big thing to be looking forward to with Orchid, in my opinion, is going to be when they take the next step with that Windows to make it more easy for people to be able to access and use. That's key number one. The second one is when they make an announcement of being something other than just with VPNs. I don't know what the industry space could be, or if it's just going to be kind of like an open market thing and anyone can go into it. But if there's one that's specific that gets announced that's now also inclusive, that'll be really huge. And then also, of course, staking. Staking will be huge, especially a lot of these people, they're holding on to a ton of this right now. We still got another 500 million plus tokens that haven't been released yet. And if you're staking in that sense and you're looking for rewards, that could be something that looks very enticing. So once they release that, which hopefully they release the staking before the end of the year, I think honestly out of everything, the staking mechanics should be a priority as soon as possible. And then number 2 would be releasing it so that it's not just with VPNs. And then the Windows update number 3 would be the next added little push. But the most fundamental ones that are going to push that drive of demand, I think, are going to be the first 2. This continues back up to the 21 EMA. We're going to look at 0.2794, basically 28 cents. Breaking above that, we need to get above this level of resistance. It's been showing in the formation at 30 cents, right? 0.29, 0.3010. Break above 30 cents, it's also a psychological element because now we're into another range, right? We're in the 20-cent range yet again. And we tried to push beyond that 35-cent range previously, and that showed itself as a strong sign of contest with the massive dump that took place with Bitcoin, the extra tokens that came out with Orchid. Not great news. The good news is that Orchid went on to another exchange, and so there is potential for more demand there as well. But guys, yeah, right now, personally, I'm still leaning towards more bearish. If it breaks above the 21 EMA, I need a daily candle close above that. It still would be a nice recovery bit, but we're talking about like being realistic here, guys. So close above the 21 EMA, 3 daily candle closes above the 21 EMA. I'll have a lot more confirmation if it does show above the level of resistance as well. If a big candle just comes out of nowhere here, one large, just boom, and it closes above that level of resistance, I'm still going to be skeptical because it has way too much history of pump and dump, right? Pump, pump, dump, dump, right there taking place. Pump, pump, massive dump, filling in the same kind of thing. And we're just seeing it over and over and over again so many times before I had this further decline period down. So tried to make a little bit of a rally, started to come back down. That's going to go ahead and do it for this video, guys. If you're new to the channel, please don't forget to subscribe to the channel so that way then you have more cryptocurrency news and technical analysis on this. I really do hope you guys enjoyed, and if you did, don't forget to hit the thumbs up like button, please. We are trying to get to at least 50 likes at the very least. If we could start saving these videos like, hey guys, let's go for 100 likes, that'd be amazing. But we're still having trouble trying to get to 50 likes on each video, and it would help us out a lot, guys. Every single like helps. Don't forget to click the bell notification so you know whenever there's a new video. Thank you guys, and I will see you in the next episode.